So many of you have asked about my opinion on Coinbase, down from $360 a share to $53 a share. That's a pretty big down move to say. So in this video, we're not gonna get into the business model because most of you are actually familiar with it. We're gonna go more into the financials and my valuation model on Coinbase to determine if it's a really good buy at $53 a share, or it could even go to $20 or $25 a share. And that would be a pretty crazy move despite the stock traded all the way up to $360 a share. Okay, now let's look at Coinbase over here. Coinbase may look very cheap on a PE basis. And this is because the earnings fluctuate a lot, which is a value trap for a lot of investors. This is not Coca-Cola stock or any stock, and you look at it, oh, but look at the PE, it's very cheap. But those earnings really fluctuate with one simple thing, and this is the price of Bitcoin or cryptocurrency. Meaning, whenever cryptocurrency are going up and everything is fine, Coinbase is gonna make a lot of money. But then whenever the tide goes out and everything is going down, Coinbase is going to make less money. Therefore, the PE is very irrelevant and it's pretty hard to value something like Coinbase. Over 95% of Coinbase revenue is actually from volume trading and, commissions and stuff. And most of the trading volume is from retail and institution. And you could see how much it went down actually quarter over quarter. Now, when those kind of volume goes down, Coinbase revenue goes down. Now, why did it go down so much? Again, because of the price of Bitcoin. Not only the financials of Coinbase go down, but the price of Coinbase stock is heavily correlated with Bitcoin. Now, as you can see, the white line is the price of Coinbase stock, and the other one is the price of Bitcoin. And you can see the close correlation between Coinbase and Bitcoin, and even Coinbase is a leading indicator actually for the price of Bitcoin. Now, we know that Bitcoin's price heavily affects Coinbase stock. Now, what affects Bitcoin's price? Because if you're buying Coinbase right now, you're betting on Bitcoin going up. In some matters or not. It doesn't really matter how amazing the company is. Its cash flow and its earnings and its stock price are basically related to Bitcoin. Now, I think many of you know right now, and I think it has been proven, that Bitcoin is not digital gold. It doesn't behave like gold. Bitcoin goes up or down on the Fed's word. If the interest rates are high, Bitcoin is going to go down. If interest rates are zero and money is cheap, Bitcoin is going to perform amazingly well. And this is just the way it is. If you're a Bitcoin investor or not, you must actually know the truth that it's not digital gold. And you've seen it many, many times. Now, for us to have cheap money again and 0% rates, for me personally, I don't think that's going to happen before late 2023 to early 2024. And what's going to happen from now then? What's going to happen to Coinbase? What's going to happen to the earnings? You have to keep those in mind. But for us to have 0% rates again, I don't think that's going to happen anytime soon, especially with inflation and stuff. So you have a year and a half to even 2 years before we even see the same thing again. And this is when Bitcoin is going to start performing, and this is when Coinbase stock is going to start making money again. Now, we took this out of the way. If we look in a little bit deeper, they have pretty good margins. But as I said before, the margins are going to come under compression from one simple thing, and this is competition. There's way too many competitors in the space. Just like before with stock trading, there was Fidelity, and then Robinhood came in, and many others, and then commissions kept going down. And the same thing is going to happen with Coinbase. The commissions are going to start going down. But they are trying to find other sources of revenue. And as you could see, they spend massive amounts of money on technology and development, and most of it was to actually develop their NFT marketplace kind of thing on their website. Now, if you believe in NFTs or not, NFTs are pretty much dead for now. Just look at Google Trends. They went up amazingly on the Google Trends. Everybody was wondering what is NFTs, and now the NFT trend is pretty much crashing. It crashed essentially because people don't care about NFTs. They care about inflation. They care about families. They don't care much about NFTs anymore. And again, people are not gonna care before 2024. 2024. So there's plenty of time to kind of look at Coinbase and look at the whole proposition before you actually buy it, because Coinbase is going to be heavily correlated to Bitcoin and the NFT marketplace if people ever want to buy NFT again in the future. So you must know that. And of course, the company has a net loss. It's of course losing money on this quarter because of some expenses they had. Now, the tricky thing is to actually value Coinbase because it's heavily correlated to cryptocurrency. But looking at analyst estimate, it's like all over the place. If you look at the revenue, it said it's gonna go down and then gonna go back up. Even, their net income margins are all over the place, from 48% to 4% to 7%. But from me knowing that the margins are essentially gonna go down more in the future, I don't know how profitable this NFT place is gonna be if people even wants to buy NFT again in the future. Maybe it's dead forever. Maybe it's not gonna be alive until 3-4 years from now. So therefore, I took the highest analyst estimate for Coinbase, which is 7% net income margins, as you could see here, going into, I believe, 2024, 7.3%. And this is what I used on my valuation model. And again, it's very tricky, but I actually tried to do my best in doing the valuation model. So this was what I came up with actually Coinbase, 7.8 billion in revenue. Revenue growth, I put in 15%. Again, the estimates, they have it all over the place. They have it going up 20%, going down 40%, because it's heavily due to Bitcoin and how Bitcoin actually trades. But I personally think Bitcoin is not going to perform before we have zero rates again. And I don't know when that's going to happen, but not anytime soon. So from me, assuming a safe 15% for the next 2 years, and then 10% until 2026. And the 7% I told you about of the net income margins, if they can even get to 7%. So I think that's pretty fair too. This is 961 million in net income, putting a 20 PE on it, which again, I think it's fair. And I think the margins are going to go down in the future because of competition. You have around $19 billion market cap. Market cap right now is 11.5 billion. This is 67% on the upside only in the next 5 years, or 11% compounded every single year for the next 5 years. And that was a tricky way to value Coinbase, as it's heavily dependent on the Bitcoin or cryptocurrency prices. But from me personally looking at the cryptocurrency or the Bitcoin price, I don't think it's gonna perform well before we have 0% rates again, and then speculation is gonna start kicking in. Okay, now in 2018, in the tightening cycle, Bitcoin went from 20,000 to 4,000. Now, if Bitcoin goes down under 10,000 again, what's going to happen to Coinbase? It's going to be $15, $20 stock. Therefore, for me, in this whole uncertainty, I would not buy Coinbase stock right now because it's heavily dependent on Bitcoin, and Bitcoin is not going to perform well unless we have zero rates, and we're not going to have zero rates anytime soon, not before late 2023 or even early 2024. So this was my video on Coinbase stock. I hope you enjoyed it. If you liked it, please press the like button and maybe consider subscribing. So I hope to see you in another video.